First, I'm excited about the macro because everybody absolutely hates it. I can see it on your face, Scott, and see it in your tweets, Scott. You just can't stand the name Jay Powell anymore. And I love those moments in time, right? Those are the turning points. It's when everything's been distressed, and I've been talking about this a lot. The cyclicality of crypto is driven by the monetary cycle. And then we've got the long-term trend of adoption. And when those two meet are the magic periods in time where the risk reward goes exponential, right? And this is why crypto looks like no other asset. There was a great thing that Bloomberg put up recently, which is over the last 10 years, 7 of the 10 years, Bitcoin's been the best performing asset in the world as a proxy for the whole crypto space. In the 3 years that it wasn't, it was the worst. And, it's buying the worst when you get this is an incredibly exciting opportunity. And you don't get this kind of risk reward. So I really like it from an investment point of view.
Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about his outlook for Bitcoin in 2023. Raoul also breaks down the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
You would never do business with somebody of which you don't have any governance whatsoever, know who any of the investors are, know where any of the money is not regulated by anybody in any way, shape or form, and give them your money. Okay. It's kind of ludicrous. I actually am one stage thinking it's bigger than that and that it's actually a state enterprise for China. And I think the crypto markets are being bifurcated into two trading zones, much like they want with the currency markets overall. They want a Chinese block and a Western block. And I feel like that is the battle that's playing out in front of our eyes, which is Binance and potentially Coinbase and a few others on the Western side. But, if you're a Filipino or you're a Brazilian or whatever, you use Binance. I mean, there's just nobody else to go to. And so they have a huge part of that. I think, and we've seen already with Tether, that even the Chinese have said, people are using Tether for money laundering. Everybody knows that capital flight in China leads to money coming out. And I think they've been using hedge funds as well. Something I don't really want to talk about, but I think that some of the largest hedge funds have been involved in that too. And I think Binance is involved in that. I think it's a way of taking money out of the Chinese system for the leadership and others, and also having control of the digital economy as it develops. And I think they know that. So, I think, so whether it goes bust or not, different, because we don't know who that backer is. If it's a sovereign state, it probably won't go bust. But you're giving your money to a sovereign state. It's dangerous, and we don't need it. I mean, this is what I don't get. Sure, I've got a Binance account. I can trade, just take my tokens off. It's all over and done with in 5 minutes. 5-minute exposure. But why do people... I mean, I got into this space because of what happened in 2012 in Europe when the banking system went under, in 2008, that we can self-custody assets. So that's the killer app of crypto. And yet everyone just goes, la, 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 I can't hear you. I'm just going to leave my stuff on Binance because I can't be bothered to figure out how to plug in a ledger. I mean, really, guys? It's inexcusable. Use them for trading, like an exchange. You don't store your futures on the CME. They get cleared and custodied in a regulated entity. Well, we can do it ourselves. So you can go there, trade, do what you want, use any counterpart you want, and then take it off. Simple.
Cryptocurrency markets lack any signs of volatility going into the year-end holiday season. This suggests that both the bulls and the bears are playing it safe and are not waging large bets due to the uncertainty regarding the next directional move. This indecisive phase is unlikely to continue for long because periods of low volatility are generally followed by an increase in volatility. Willy Woo, creator of on-chain analytics resource Woobull, anticipates that the duration of the current bear market may be longer than 2018 but shorter than 2015.
Every time you're bringing on, by the next bull run, just by the magnitude of the adoption curve, right, you've got another 600 million people to come. You've got to educate them all over again. And humans being humans will make the same mistake every cycle. I've been in this since 2013. Yep. Every time an exchange goes bust at the bottom of the cycle, and everyone learns the same lesson all over again because they're all new participants.
The crypto winter has resulted in a loss of more than $116 billion to the personal equity of 17 investors and founders in the cryptocurrency space, according to estimates by Forbes. The carnage has been so severe that the names of 10 investors were removed from the crypto billionaire list. One of the major losses was attributed to Binance CEO Changpeng CZ Zhao. In March, his 70% stake in the crypto exchange was valued at $65 billion, but it is now worth $4.5 billion.
Again, I've kind of lived through this a lot, whether it's in crypto and traditional markets. I was heavily involved when long-term capital management, the giant hedge fund, went under. That brought down about 20 hedge funds at the time. And it was so catastrophic that the Federal Reserve had to bail out the banking system. The outcome then was anger, despair, hatred, hedge funds, leverage, opaque vehicles. Nobody should be allowed to invest. How dare you put your pensioners' money into it? What happened was actually regulation and the size of assets in hedge funds tripled in 4 years. Then Bernie Madoff came. It's a scam. It's a Ponzi. It's all opaque. It's a terrible business. Nobody should put their pensioners' money into it. What happened? Regulation. It 5x'd after that in size to $3 trillion. So actually, the regulation is a good thing. I know a lot of people in this space don't like regulation, but you can't have it both ways. You cannot want to exist on-ramping and off-ramping from a fiat world and not have regulation. It's as simple as that. And so when that comes, which it will, it's just a matter of who wins the fight between the CEC and the CFTC. There will be an answer, and that will give everybody comfort in the space to get in. So I don't think it changes the adoption curve. It's no different than Mt. Gox going, which was actually bigger because it was a bigger part of the market. It would be like the equivalent of FTX and Binance going under at the same time. Now, that may be happening if Mike's right.
Maybe
but,
Coinbase. Maybe Coinbase.
Right? It was everything. Yeah. Right? I was lucky. I was with Itbit, which Chad Cascarilla, who founded Paxos, had started. And I was out of the whole thing, luckily. But, we saw it with Bitfinex as well. They were huge when they went, insolvent. So we've seen it a number of times before. It doesn't stop the space. It's usually just when the tide goes out, and that's usually when monetary liquidity is withdrawing from the system, you see who's swimming naked. And it's always, listen, it's a really simple thing, Scott. You do not ever build a business of leverage on an asset or of a collateral that is 100% volatility. That's fucking insanity, because it will, probabilistically speaking, force you into insolvency, guaranteed. Now, that's why real estate has leverage, because it's very non-volatile. It's maybe a 0.5% volatility asset or a 1% volatility asset. This is 100 times more volatile. And idiots think every time, you know what we need to do is build leverage on a 100 volatile asset and then wonder why they blow up and go, really, guys? It's pretty obvious. So anyway, that's my learnings, that regulation will stop the leverage in certain ways, or reduce the leverage for in line with the underlying volatility, and sort out properly client segregation of funds. I mean, I was also caught up at MF Global, which was at the time was massive as a futures brokerage. It was bloody John Corzine, my old boss from Goldman Sachs, who was the governor of New Jersey. He stole the customer money to take bets on European government bonds. And he was a fully regulated futures brokerage. What we're going to recoup from FTX? We have no idea yet. Whether it's a donut or whether there's 40% to come back, we just don't know.
Among those who lost the billionaire status are FTX co-founders Sam Bankman-Fried and Gary Wang, whose fortunes in March were valued at $24 billion and $5.9 billion respectively, and at $0 in December. The $3.2 billion fortune of Barry Silbert, founder and CEO of Digital Currency Group, was also lost as a result of the contagious wave caused by the collapse of FTX, according to Forbes.
Economy, so whether it's the US economy or the British economy or any of these, the financial system usually fails a couple of times. As people are building, they create the wrong risk, they don't understand. It's actually pretty common. 1929 and the banking crisis that went before it was pretty common at that early stage, because what you do is get the rampant speculation that uses the leverage. The underlying principle, which is this economy is going somewhere, and therefore, as you say, finance will help it along in its journey, gets lost in the speculation of the orgy of leverage. But in the end, the journey still continues.
This period of calm is unlikely to continue for long, and the BTC/Tether pair may soon witness a range expansion. Generally, it is difficult to predict the direction of the breakout. Hence, it is better to wait for the pair to make a decisive move before initiating directional bets. Could the bear market deepen further, or is it showing signs of starting a relief rally?
Held this up. The CFTC would have done this a while ago, and they regulate exchanges. It's their bloody job. But Gensler's been, I'm sorry, but he should take a lot of blame for this. And I know there's no point pointing fingers at each other, but people like Brian Armstrong has gone to them repeatedly and say, you need to sort this out. And he's like, we will sue you in retrospect and we won't make a ruling on anything. And nobody's going to rule whether it's a fucking security or it's not a security. I mean, it's insanity. And I'm sorry, but he's got the blood on his hands of the people who lost money. And he needs to own some of this because it was his fault. If there's anybody to blame in why people within the US got hurt, why did they go outside and use VPNs to use FTX? Well, because of the regulatory lack of clarity on the ability to do anything in the US itself. Now, at least Europe is a bit clearer. Singapore's great. Dubai's pretty good. Everyone's got Japan's getting their clarity. It's only India, really, and the US that's a total swamp still trying to figure this out. And that's hurting people.
So, what are your thoughts about Bitcoin's performance in 2022? How will it perform in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.